We're excited. It's not just Flag Day, it is Fed Day. Happy Fed Day to those who celebrate and observe. The Federal Reserve's policy decision just minutes away. The Fed expected to leave rates unchanged after 10 consecutive hikes. Stocks have been a little bit mixed ahead of that decision, but the market's overall betting on a pause. Joining us now, not a betting man, Kudlow host Larry Kudlow. Does the pause become permanent? Is that what the markets are hoping? Or can we then reiterate that it's a go in July?
I have no idea. I have no
TV.
idea.
You've got to do better than that.
No one else has any idea. What is their North Star? What is their rule? How is it, besides trying to destroy the economy and target jobs and the unemployment rate, which is the stupidest thing? I was thinking about this. We really, there's a lot in Washington. We need a special counsel for the Fed. We need someone to have a deep investigation of the Fed. By the way, I'm not kidding. We've had monetary commissions in the past. I say this, I'm being cheeky, but look no one really knows what they're targeting and what they're looking for. Now, the inflation rate is about 5% on the CPI. The PPI a lot lower today. That came in almost, there's almost no PPI. It's almost flat, 0, 1% max. So you could say, okay, which is the more important index? Or Greg Yip's writing a column in the Journal. He just posted it an hour or two ago. He said real interest rates aren't high enough, okay? So I did a calculation using the market. So the TIPS, right, the Treasury Inflation Protected, in round numbers, the 2-year TIP is 2%. I'm doing round numbers. The Fed funds rate is 5%. It's 5 to 5.25. So that means the real Fed funds rate is 3%. Now, that's historically pretty good, pretty high as an inflation fighting tool. Elsewhere, the yield curve is very inverted, as you know, right? The M2 money supply for the Milton Friedman monetarists out there has collapsed, absolutely collapsed. And commodity indexes are very soft, way down from a year ago. Gold, which is a bellwether sometimes, hasn't moved really in, I don't know, at least a year or more. So I would say to you, forward indicators say the Fed's done their job, okay, even real rates. Coincident indicators like the top line CPI, ex-food and energy, says the Fed hasn't done its job. Who do you trust? I would trust the forward indicators and pause. I would, but it's all very confusing.
He could pause today. He broadcast that he wanted the option, right, to do that. He left it on the table. Or he can hike another 25 and just, put that last little jolt in before he pauses, maybe, as Taylor has brought up before, for good. Some people are saying that may be an option. I am with you, where every time I try to predict what he's going to do, I get it wrong. So I don't do that anymore.
It's because it's funny. It could be a pause, but it could be a skip.
Yes.
Okay, skip and wait. That's not the worst thing in the world. Look, the mistake the Fed made was almost 2 years ago.
Yep.
They were in total denial about inflation, okay? About the liquidity they pumped into the economy, about roaring commodity prices, about a steep curve. They ignored the leading indicators, and so then they lied about it. They said it was transitory. This is a flat-out lie. He was playing ball with Joe Biden to get renominated. And then all of a sudden they wake up, in the late winter of 2022, and they start jacking up rates 75, 75, 75, 500 basis points in a year is pretty fair piece of work.
Yeah.
One thing that's interesting is the economy is doing better than you might think.
Yes.
I'm interested in the stock market, okay?
Huge.
I was just fiddling around. Yardeni was right. The bull market probably started last October. We're up 20%, some odd. But here's some interesting stuff. Dow transports year-to-date up 8%. That's a cyclical. The SOX index for semiconductors up 45%. Ooh. Home builders, S&P 500 home builders year-to-date up 33.6%. And S&P retailers up 22% year-to-date. Now, those are classic cyclical, economic sensitive stocks. You wouldn't think with a tight Fed that they would be doing as well as they're doing, but they are. So go figure.
So Larry, you're the bull here today. You were feeling good, at least about where things are going from an interest rate perspective.
Yeah.
But I look at the Biden administration's response to CPI numbers yesterday. Okay, we get that number. It's a 4% number. They put out a chart bragging about how much inflation has come down, okay, because they want to take political credit for this. I read that, and I say to myself, they view this as the invitation now to crank up spending again, and they've got a debt ceiling reprieve on that. So for the folks at home, we're paying attention to interest rates, but they're saying spending got us into this mess, and I see an administration that looks like they're guns blazing to do more of it.
They won't
be
get
checked,
it.
right?
The Republicans in the House won't let them have it.
Yeah.
You're going to have a big appropriations battle. There may be a government shutdown this fall, which I, by the way, would completely welcome. I hope they do that now that the debt thing is out of the way. But you know what? Step back for a minute. I have Art Laffer coming on, and he's the big picture guy and brilliant guy. Maybe the stock market is telling us there's going to be a change in the White House, okay? And that all this socialism and overregulation and taxes and spending and so forth is going to be changed, okay? Maybe the spigots for oil and gas are going to be. Sometimes the stock market gives you a sense of the future health, wealth, and welfare of the country, okay? It's a very old-fashioned point of view, but I happen to believe in free market capitalism, and the stock market is a big deal. You know, it covers the whole world. S&P 500. What are you doing? You're buying America. That's right. So I'm just saying, the market may be looking at Joe Biden and his little socialist pals and saying, you're not going to make it.
Less than a minute to go.
Feel free to disagree with that.
No, we agree with
that.
you. And JP Morgan actually saying you've never gone from a final rate hike to a recession before the Fed has to cut before then. So they're actually looking at a cut in September. Is that the optimism as well that maybe we see?
Who knows? This rate cut. Quit controlling interest rates. It's just a bunch of price fixing. Just stop controlling interest rates. They have the control of the monetary base, what they buy and sell, net assets. See what the gold is doing, see what commodities are doing, see what the forward-looking price indexes are doing. Just fiddle around, these little dials. But that's the stuff. That's why the Fed needs a special counsel. They need a serious investigation.
How about they need something on the fiscal side that's not what we've gotten the last 2 years, Larry.
Well said.
Because when the fiscal side's doing what it's doing, that's why the Fed has to do what it's. I'm with you
Larry,
on that, but that's
we
why.
can't get special counsel for the situations we really need.
I'm telling you, I want an independent investigation.
We love having you on the show. We'll do an independent counsel for Larry Kudlow just for him. Larry, thank you so much. Make sure to tune in to Kudlow 4 p.m. Making Money with Charles Payne starts right now.